Hello everyone, welcome back to the channel. I believe this is Robinhood Portfolio episode 24, and today the portfolio is up $35, and in the after hours I am up $7. So today I was looking at my portfolio. I was evaluating just what's been going on throughout the week as far as the trading war and the tariffs, and I really just going ahead and show my percentages for the week. As you can see, thanks to the tariffs, I am down almost $117, and for the month I am up $172. So we're gonna get into this, guys. I just wanted to hurry up and do a quick Robinhood portfolio video, and we're going to see what kind of changes I've been doing. Have I done any changes at all? How I feel about the market in general, and what are my outlooks. So let's get started. Let's jump on into this portfolio. You guys can see some of the shares that I've had in the last video. Really nothing has changed here. There have been a couple of minor changes to this portfolio, but we're going to talk about Apple just really right quick. A lot of the reason why my portfolio has been taking the hit is because Apple has been going back. It is the largest position in my portfolio, and as you can see, Apple is down almost $6 this past week, and the percentage it's in a negative percentage of 2%, so or close to 3%. But I went on ahead and I added 2 more shares to Apple. I like Apple a lot. I just think that they're a phenomenal company, and every time it dips, I just try. If I have the money, I try to add more and more shares. I really don't want my portfolio diversity to get over 20% because I think that's a little bit too much, and I don't want to be. I want to be diversified. For me, at least, I want to be diversified with stocks that don't have a portfolio diversity over 20%, because then I might as well buy a ETF at that point. So Apple trending back. I'm adding shares. I plan to add more shares to my other stocks so I can sort of just balance out my portfolio a little bit. Like I said, I don't want this to get over 20%. So as you can see, my portfolio has been taking a little bit of a hit lately, but Johnson & Johnson seems to be doing very well. They've actually reached the $140 mark, and this is slowly becoming the best return in my portfolio. $200 for a 16% increase. That is just phenomenal gains. And like I said before, I just love Johnson & Johnson. I love what they do. I just think that when I saw that stock was at $120, that just screamed to me that the stock was trending at very undervalued levels, and I kept telling everyone. I said, "Hey, buy a stock, buy a stock. Buy a stock. It might not go back to $120 ever again, because they are just a phenomenal company, and they have a reliable dividend, a safe dividend that they pay out." So, Johnson & Johnson is slowly becoming the best percentage return and total return in my portfolio. Verizon, I don't expect Verizon to grow too much. I refuse to add any more shares to Verizon until my average cost goes down, until the price of the stock goes back down to maybe about $50 or maybe around that $51 mark. I won't add any more shares to Verizon. But however, like I said in my other Robinhood portfolio videos, I do want to increase Verizon shares to almost I'm thinking around 50 shares. I want at least 50 shares of Verizon so I can get a fat dividend, and I can just put the dividends into my bank account, and I continuously grow money that way. It's all about growing money, guys. That's what I'm all about. We take a look at RDSB. Shell is an energy stock that is continuing to creep up here. $68. I think my average cost was around $65. A total return for about $44. So this was a good buy. I bought it at a good time. I really did think that Shell really has a great support level around that $65 mark. It's really around $62. That once it reach a support level, that you can safely buy some shares and let the market let stock trip back up. But I mean, again, it's all about doing your homework. It's all about doing your due diligence and trading off the technicals and the fundamentals of these stocks, because you see returns like this, and then you say to yourself, okay, should I hold on for the long term, or should I take the money and go? So Shell is going to pay a nice dividend here. It's going to pay a 5% dividend, which is really strong. It's almost about, I think, $14 for me, but the total return is almost $44. So you look at things like this and you say, okay, what am I going to do now? Am I going to take that $44, or am I just going to wait for the dividend and take the $14? Because we don't know what the stock price would be once they pay out that dividend. So this price can be anything. It could be $50, it could be $90. We don't know. So yes, it's really just best, and this is what I said in the last video. It's really just best not to look at your portfolio throughout the day, because you're looking at your portfolio and you want to do things, you want to try things, and you're just you're trying to make money, and that's that's something I can understand fully. Everybody likes money, and everybody's trying to make money and get rich and live healthy, happier lives. So Starbucks is doing this thing. It continues to grow. If you bought it where I said to buy it, I'm not a financial expert or anything, but I do look at things, and I saw that Starbucks was on sale, so I picked up a couple of shares of Starbucks around $48, and I think I've added 2 Starbucks when they're around that $52 mark. So I really reached around a total of 20 shares, and total return is $117, which is, again, like Johnson & Johnson, just absolutely phenomenal. And they pay a dividend, a great dividend. And I really thought about selling Starbucks and picking up McDonald's, because I like McDonald's dividend a lot. They pay $1. I think it's like $1.02, $1.02 dividend. But Starbucks, I just like them. I like what they do as far as the fundamentals are concerned. And when you look at the fundamentals of the stock, I said it before. It takes nothing to make coffee. It doesn't. You make the coffee and you sell it for $5, and then you sell some more coffee for $5, and then more, and then more, and then more. Every time I look at the drive-throughs of these Starbucks, the drive-thrus are always filled. So those are customers that are paying $5, $10, $15 for coffee, just for coffee. And that's just a ridiculously low price to earnings ratio. It takes nothing to make it. And they're getting clever with these Starbucks. They just don't sell coffee. They sell croissants and cakes and all kinds of stuff in these Starbucks, frappuccinos and all this, everything. It's just phenomenal how Starbucks has grown throughout the years, and there's maybe a lot of worries about China. Are they growing in China? I know the numbers are not accurate or something like that, but again, guys, you just got to do your homework. You got to look at the technicals of the stock. You have to evaluate fundamentals of the stock, and when you look at the technicals, this stock was around $48 June 2nd, 2018, and I don't think that stock ever got that low. If you have to actually go all the way back to 2015 when the stock was that low. So it's literally been 3 years since that stock reached that price. And if that doesn't scream a buying signal, I don't know what does. But a lot of people were saying, hey, Starbucks is going to go back down to $40, this and that. And did it go back down to $40? No, it's actually going up. So phenomenal stock. It's a great discretionary stock. This stock has plenty of potential. Once they figure out their marketing just a little bit better, just a little bit more, I could see this stock shooting up to maybe around that that $80 to $100 mark. I kid you not, guys. I kid you not. Visa, it's a grower. I don't have to explain much about them. Up $100. I did have a call option with them. And I one that I really should have just held on to their call option. But I like these little growth stocks that grow. I had Microsoft in my portfolio for a while, and they're growing. Visa's growing. I like growers. I like growth and dividends. That's what it's all about. 3M, I don't have to say much about them. They dipped in my last video. That I shown that huge dip, that panic and that fear when the CEO of the company said that the raw materials or something like that will factor into the stock, and it was going to take off like 10 cents off earnings or something like that. And a lot of investors freaked out. But the stock is going back up. It's trending back up. We can see the dip right here. Got up all the way to 214, all the way down to 206, and now it's up to 211. So, these are buying opportunities. These are buying opportunities for dividend aristocrats that have been paying this dividend for forever, literally forever. And I know I've been doing call options with them, which is really risky. Again, if you we're gonna call options itself is risky, but don't just, I would say, just don't go crazy with options. Don't. I see people buy like 7 contracts, 10 contracts, and in these really bad companies, and people are saying, hey, I'm losing my money here and this and that. Well, that's the reason why, because you're putting your money in bad companies. Put your money in good companies, solid companies, companies that are growing, and companies that know what they're doing. A new stock in my portfolio is BRKB. I bought this today, and I realized the average cost is a little bit high, and that is really not a good investment strategy buying at the high point. But Berkshire Hathaway, guys, Berkshire Hathaway. So Costco's gone. So Costco is gone. And let me explain why I sold Costco. It wasn't because Costco was dipping or anything else like that. I wasn't too concerned about Costco dipping. All stocks dip. Like, I'm not really concerned at this point about Costco dipping, but Costco, to say that Costco has trended up nicely for the past several months. It really has, and I think I bought it around 229. That was just a little bit too high for my liking. I think I've said it before. I wasn't a fan of that average cost, but I kept it in my portfolio anyway because Costco is just growing, and it's growing, and it's still growing. It had a really nice day today, but it's just expensive, guys. These stocks that are like $300, $340, $250. You buy a share of it, and then you say, "Oh, I want more shares." Well, get ready to fork up the cash for these shares, because if I'm gonna show what I see when I get ready to buy. Right now it's priced at like 234 or something like that. So you see my market available money that I have available is $34. So one share, $234, two, $400, five, $1,000. So that's just 5 shares. Just 5 shares is $1,000. Now, if I want 10 shares, $2,000. $2,000 for 10 shares. If I want 20 shares, $4,000. So, guys, this is money that, it's a lot. It is. It is a lot. And, if I'm going to shell out that much money for one stock, then why not buy many stocks? And, the thing with Berkshire Hathaway is that it's a firm that holds many stocks. Berkshire, this is Warren Buffett's, pretty much Warren Buffett's whole portfolio. When we look at Berkshire Hathaway, and we know the stocks that he likes, you're just going to roll with Buffett here and say that, hey, I want to buy some, I want to have a percentage of Apple. I know he likes those airliners like Southwest and Delta. And what are some other stuff? Goldman Sachs. He likes the banks. He likes Bank of America. I think he has some Costco in Berkshire. I think in Berkshire's portfolio they have some Costco. They have some Walmart. So they have Visa. They have MasterCard. So it's a great firm. It really is. And I know that Berkshire is never going to split Berkshire A shares. Berkshire A shares is almost, I think, like $400,000, but which is insane. He's never going to split those shares. But Berkshire B allows you to own a piece of Berkshire, if that makes any sense. And it's essentially an ETF. Minus the fees. I mean, we do look at the PE ratio, which is actually quite low. If we look at the Robinhood portfolio PE ratio of 11%, I actually might want to check that. I really don't believe it's that low, but the market cap is insane, and I do believe that this stock is really just a buy and hold stock. A lot of people just put their money in Berkshire Hathaway and trust Warren Buffett because he's one of the greatest investors who ever lived. And he's a great mentor to me, and this is probably the reason why I want to show my respects to Warren Buffett. I really do like Warren Buffett a lot. I every time there's a video of him talking, and what his thoughts about the market. I mean, this guy literally is the greatest investor who ever lived, and I just have so much appreciation of his knowledge, and when he's sharing his insights to the shareholders at these meetings, and he's just telling everyone, hey, this is what's going to happen. This is what to expect. This is what Berkshire is doing. He's always keeping his shareholders happy by telling us, what's ahead, and market strategies, and he's knowledgeable. He's knowledgeable. He's made tons and tons and billions of dollars off the stock market. And I guess to show my appreciation, I threw some money into Berkshire Hathaway, and I said, yeah, let's grow with Buffett here. He's one of my favorite investors ever, and I do like Berkshire Hathaway as far as their holdings. It really helps my portfolio. Sort of get into the banks, get into the retail, because I looked at Costco. Even though I liked my diversification, I didn't really have a solid bank stock. Visa's not a bank stock. It's more of like a technology sort of financial stock, if that makes any sense. But banks like Goldman Sachs and Bank of America and Wells Fargo, they're in Berkshire Hathaway, so that gives me some exposure to them, along with the Costco's and the Walmarts and this and that. So Berkshire Hathaway really fits what I want to do. Now, the reason why I only bought 5 shares is because, they are trending at the 52-week high. It just doesn't make sense to just buy tons and 15 shares, 10 shares of Berkshire Hathaway when it's trending at all-time highs. So, 5 shares, don't go too crazy with this, but let's just buy 5 shares right now, put $1,000 in, and just wait, because, I just feel like Berkshire Hathaway, does a lot. It should, in the long term, help this portfolio grow. And, I want to be one of those shareholders that listens to the conference calls, and if Warren Buffett's around, he's talking, and I'm just sitting there and I'm listening to him. And like I said, we don't. No one's perfect in the market. No one's absolutely perfect in the market. And Warren Buffett will be the first person to tell you that no one's perfect. But you want to know how he makes his money? He buys and holds. He buys and he holds, and he doesn't touch anything. I know he sometimes he does. He moves some stuff around, and he has his advisors talk. He has the advisors of Berkshire Hathaway, talking to him and telling him, hey, we like this stock, we like that stock. But it all ends with him. It all ends with him. Whatever he wants to do. If he feels like IBM's not going anywhere, and he likes Apple, he bought up Apple. And that's the reason, a big reason why Apple, when it was trending around that $170 range, it shot up, because he kept buying it. He loves it. So, guys, that's really gonna do it for this portfolio. There's a Microsoft call here, and again, like I said, don't go crazy with options. Be smart. Look. The thing with the options is this: you look at options. Right now, I'm down $10, but the thing with options is, a lot of people buy like these 10 contracts and super contracts, costs of about 20 contracts and this and that, but I try to buy options off growers. So, I didn't get any success with 3M. I don't see 3M as a growth stock, particularly. That's more of like a buy and hold stock. But, growers like Visa, growers like Amazon, growers like Microsoft, that's where the many call options are getting their money. And if you look at my portfolio, if you look at my contract, the expire date for this call is 1/19. So I have until January 18, 2019 before the contract becomes essentially useless, and you're just out of the money if the price isn't $119 or more. So that's a big call there to say that that stock will be $119 or more. But the plan for me is that I'm not going to hold on to this and all the way until the expiry date of January 18, 2019. My goal is to just hold on to this and just wait and let this spike up throughout the months. Like we still have October, we still have November, we still have December left in the market, in the 2018 market, and by then, my way of thinking is that Microsoft, as a growth stock, as a good growth stock that doesn't dip much, is going to go up. And I know I'm down $10 right now, but guys, it's a risky call. It's a risky call. That's the market in general. The greater the risk, the greater the reward. So you make calls like this, and you just wait and you see what happens. It worked. I showed them before. It worked with 3M. Excuse me, I did not work with 3M. I did my call option with 3M. I lost $30 with that call option, but I earned about $65, I think, with Visa call options. So again, guys, these growth stocks, and you look at I think another good call option stock that that can actually pay off in the long run is MasterCard, because MasterCard is just trending up. It's a grower. Some people thought that this stock was overvalued at $200, and look at it now. It's $220. So the stock keeps going up, and it's having great returns throughout these past 3 months. It doesn't seem to care about the tariffs, and it just keeps spiking up. So that's good to see. So, I mean, guys, that's going to do it, really. There's really nothing to see here as far as the changes. I've talked about everything that I could. I know Procter & Gamble, here's a stock that I didn't talk about, but I'm up $121 with them. And I wouldn't buy this right now. I would probably wait back for the next super dip or something like that. When it gets around when it gets around $70, I think that would be a good buying point for Procter & Gamble. But yeah, guys, just let me know what you think about my portfolio. There's a little bit more risk here with the options trading. I'm not a big fan of it, but I'm gonna see where it goes. Like, I didn't put a lot of money here. I just have one contract and one call buy, and it expires next year. So we have plenty of time to sit and just wait and see how what the stock will do as far as getting some returns out of that. I'm not going to sit here and I'm not going to do call spreads and covered calls and all this and that. This is just me having some money sitting around, and I bought a call option from Microsoft. It's a great company. It's a company that again, I had in my portfolio that I trust. That I really do believe that Microsoft Cloud is getting bigger, and the stock has plenty of potential to go up to about $120. I think that possibility is very realistic. So, with that being said, that's my portfolio, guys. The new additions: Costco out, Berkshire Hathaway in, and I'm rolling with Buffett, and I want to be like Buffett because he's my favorite mentor and investor. So, guys, gonna do it, guys, and take care, and I'll see you next time.